Good morning, everyone. This is Lux, founder and CEO of Unicus Research. And I have with me here Michael, who is the CEO and founder of Prometheus. Prometheus is a very unique platform for emerging and established managers. Michael, thank you for joining us today.
Thanks for having me, Lex.
Of course. Prometheus is very unique, Michael, and I know I have said this to you several times. I have been on so many platforms as a startup, and some of them are okay experience and some of them left a bitter taste. But Prometheus is very unique, and it's also very forgiving in communicating with other Prometheus members. So what drove you to start this platform?
Sure. Well, thank you for that praise, and always lovely to have you come on the platform and post amazing content. So thank you very much. I started Prometheus after, being on Wall Street since 2005, essentially, and I wanted to build this from my perspective as a fund manager, but also as an allocator to many other funds as well. And the, couple of North Stars for us and sort of what we aim to achieve and why we built this thing. One is access and two is education. So let me double click on each of them. So on the access front of things, it's no surprise that most ultra wealthy billionaires, et cetera, they have at least 50% of their portfolios in alts. But the rest of us, the rest of the population, even just broader high net worth in general, have very low penetration in alternatives because they haven't been able to access hedge funds, venture funds, private equity funds, et cetera. And I wanted to build a platform where folks can easily access this asset class that has made a ton of money for many institutions and obviously the ultra wealthy. So that's number one, is access. And then number two, on the education part of things, what I was finding, particularly during COVID, is that investing became very culturally relevant. So you saw the meme stock craze and sort of the Redditors, Wall Street Bets, all that other stuff. And, one of the sort of negative things that came out of this whole period is that everybody was going to places like StockTwits and Wall Street Bets to get their investment insights. They're not really learning about investing. In fact, they're learning about speculating. And so and generally, when you go on a Wall Street Bets, you're getting your investment insights from some anonymous person who likely has zero experience. Like, why would I take investment advice from somebody who has no idea what the heck they're talking about?
Exactly.
It'd be equivalent of me breaking my arm and I ask you for medical advice. I'm sure you have an opinion to give me, but I'm not sure that I should probably go to a doctor. I'm not sure that information is credible. So I wanted to build a platform where the broader population can go to get credible investing insights from the pros, from folks like yourself, from fund managers, from folks on Wall Street in general. And so credible investment and business insights is really what the that sort of social content community is built for.
Thank you, Michael. It's very helpful because you clearly nailed it when you said credible information. Sometimes it makes me wonder, Wall Street Bets and meme stocks, where are the regulators? So creating a platform for asset managers to have a credible access to information, it's unique. Thank you for clarifying that. And how many fund managers your platform has as of this moment?
We don't have perfect data right now, but I believe that we have certainly hundreds of fund managers on the platform. However, that being said, on the actual marketplace where folks can go to shop for hedge funds, venture funds, et cetera, we have about 18 funds on the marketplace. We keep that marketplace very highly curated because fund managers will apply to be on the marketplace to be able to sell their product on the marketplace, their product being their fund. But we have to keep very, very high standards on.
Tell me about it's interesting because, sorry to interrupt, but
no worries.
When you said the marketplace, you have 18 managers and you have high standards. You curate it for managers to enter or apply to enter. Tell me more about this marketplace.
Sure. So think of the marketplace. Good analogy would be it's kind of like Amazon, but instead of coming here to buy toilet paper and books, you come to Prometheus's marketplace to shop for hedge funds, venture funds, private equity, and soon enough, private deals as well. And I'm not talking about random startups trying to raise a couple $1,000,000. I'm talking about allowing people to get access to the largest venture-backed companies like Stripe, SpaceX, Epic Games, stuff like that at lower minimums. So
interesting. That's really helpful. So it's just for emerging managers, or do you have of the 100 or of the 18, most of them emerging managers, or do you have some established managers as well?
It's very broad. So we have both emerging and established managers on the platform. Now, our marketplace, though, was really built to help that emerging manager build his or own exposure and help them raise assets. Now, if you're a very large established manager like a Citadel or Millennium or Blackstone, you likely don't have issues raising capital. Now, the lay of the land for the alts universe for your listeners is that there's about 15,000 fund managers out there in the alt space across hedge fund, VC, PE. And the problem is that the vast majority of these fund managers never, you never hear about them. They never get exposure because all the capital that comes into our industry go to essentially the biggest 50 managers. Now, I say the biggest, not the best performing, right? Because generally it's the emerging managers, the smaller managers that are the better performing managers for a very obvious reason. Size is the enemy of returns. Very difficult to allocate $500 billion at Blackstone, much easier to allocate $200 million at XYZ hedge fund. So we really focus on the best performing managers. And if you look at, in general, if you look at our marketplace, most of our managers last year were up when the markets were down significantly, right?
Yes.
And so, and that is really the hallmark of having an alternative in your portfolio is we like to find things that generally don't correlate with the broader economy and the broader equities markets.
Thank you. It's very helpful because I spoke with a couple of managers you introduced, and their performance was really good. I think one of the reasons is that all these managers do not have platform. Most of them are not aware, and they bring a lot of returns, and they also have more control. I tend to believe from the research perspective, I tend to believe that emerging managers have a lot of control in making the decisions rather than established managers. You have to jump through the hoops.
That's right. Yes. And by the way, in terms of just to clarify the term emerging, it's the managers that we focus on are emerging by name only, meaning that most of them actually have a long track record, multi-year track record. Some of them have a decade plus track record. But we're really talking about smaller managers here. Let's call it the sub $1 billion managers. Now, that being said, we do have larger managers. We are also onboarding some more established managers as well. But quite frankly, I didn't build this thing for the established of the world, right? I built this thing for the 14,000 other funds that need our help.
Thank you. I have a question to build on your response. You said you're bringing in some more established managers. What's their intent to reach out to Prometheus? I mean, they could have anything they want. So what are they looking for in Prometheus?
Yeah, it's a great question. And it's quite interesting. There's an obvious use case for the vast majority of emerging managers to get on our platform because we're going to help them build exposure and help them raise assets, right? But however, if you're an Apollo or Blackstone, like why would you come on Prometheus? Because you have access to all the capital in the world, essentially, right? And you already have exposure by default. People know who you are. And so for instance, we're onboarding one of the largest private equity funds in the world right now.
Congratulations.
And the reason, and the reason why they want to onboard onto Prometheus is because they're focused a lot of their efforts and resources now on trying to tackle broader high net worth, right? Which is very difficult to do. Even if you have a 100 or 200 or 500 person sales team, it makes no sense for that salesperson to call up every doctor they know to get a $50,000 check. You really need to use a technology platform like ours to basically aggregate a bunch of smaller checks into the fund. And if you think about the alts sort of universe today, it's about 14 trillion of assets, right? But that 14 trillion is entirely owned by large institutions, pension funds, endowments, stuff like that already have half their portfolios in alternatives, which means that there's not actually much growth left in the institutional world. So if you were smart, whether you're a small manager or a very large established manager, if you want to look towards the future, most of the growth in alts isn't going to come from that institutional world, which is already fully penetrated right now. It's going to come from broader high net worth.
High net worth, yeah.
Right. And by the way, broader high net worth, we're talking about $170 trillion of capital that has very low penetration alternatives. So that's why some of the more larger established managers are looking to onboard onto us in order to tackle this huge TAM, essentially, of high net worth.
That's very helpful. And also they can focus without much noise that they otherwise get.
Exactly.
Thank you. And I have a couple of more questions, if you don't mind. In your opinion, you have a rich background intellectually rich background coming from Wall Street. In your opinion, what do emerging managers covet that most established managers take for granted? I mean, I know there are several things, but in your opinion, if you were to narrow it down and be blunt, the things that emerging managers covet that most established managers take for granted.
Yeah, it's that access to capital, I think, would be number one. If you're a large established manager, you're getting capital and sometimes on a weekly, or monthly or quarterly basis. Because there's just natural demand because you likely have channel partnerships with a bunch of wealth management platforms that are just feeding capital into your fund. That doesn't exist for the vast majority of managers. The vast majority of managers are sub $1 billion in assets. Vast majority of managers have a lot of trouble and a lot of obstacles in terms of raising capital, because right now, if you're an emerging manager running $100 million hedge fund, let's call it, you're still competing against Citadel and Millennium and some of these established managers for the same asset pool, because you're gunning after these institutions that, by the way, inherently always favor the large established institutions, because nobody gets fired for investing in Bridgewater, right? Sort of like nobody gets, that old saying about IBM, right? Nobody gets fired for, putting their money in IBM products. Well, it's the same thing here with the current establishment of the industry is that most the allocators are favored to invest in some of the more established fund managers. And what we're doing is really opening up the TAM from institutions that favor these established managers to broader high net worth that may not care about the brand name. They may not even have heard of the established manager. All they care about is performance.
Exactly. Thank you. I wanted to ask a question. If you don't feel like answering, please say so. Would you say, because what I have been hearing is emerging managers are not getting the exposure, but they're very good in able to provide returns. And you also see in the mainstream media a lot of established managers, the Blackstones and BlackRocks of the world, with a huge amount of capital at their disposal. They're also starting to sometimes tend to be less prudent on how they invest their capital. In your experience, would you say that emerging managers less than $1 billion or $2 billion are hungry and are more prudent towards their investment and strategies compared to some of the established managers?
It's a good question. I don't know if prudent is the exact right word for this, but I would say that if you're an emerging manager, and you run a sub $1 billion fund, you can't rely on the management fees to necessarily make a living, right?
Okay.
Or a great living, which means that you
Okay.
have to rely on your performance in order to generate the income that you want, essentially. Whereas it's vastly different when you become a $5 billion, $10 billion, $20 billion firm. You stop to take risks, and it's a very obvious reason why, is because you're collecting 2% management fees on that 5, 10, $15 billion. And that's a very great business. Like, you don't want to jeopardize whatsoever that steady, income, essentially, right? And so you stop taking risks that you probably used to take when you were a smaller manager. Whereas, again, with a smaller manager, if you're running $100 million fund, and a lot of times you're not getting 2% management fees, maybe you're getting 1%, right? And then you have all these different fixed costs and stuff like that you got to pay for. The management fee is basically used to just fund the operations of your business. You may not even be making any money off of that management fee. In fact, again, so which means that you're going to do everything you can to
increase the
generate
returns.
good. Yeah, exactly. So
that's very helpful. So in your opinion, what are the top 2 needs of every emerging manager?
Well, number one, they definitely need good performance. So off the bat, there is, here's one stat for you. So there is no correlation between positive performance and assets under management, i.e., just because you're up 100% this year doesn't mean you're going to raise any capital, right? However, there's perfect correlation between negative performance and assets under management, i.e., if you lose money, nobody's going to give you money, regardless of who you are, right? And so number one is, sort of as a gate, you need to have good, decent performance, right? But the other sort of needs would be, 2 is exposure, and 3 is capital. And not in the order of importance, but those are certainly needs. In order to attract capital, people have to know you exist, i.e., exposure.
Exposure, yes.
Right. And so how do you build exposure in a very fragmented industry? Well, you come to a place like Prometheus, where we have, thousands of allocators on the platform. And it's scalable. By posting content, you're hitting a very large, relevant audience with a lot of money, who are only there for the purpose of, finance and investing.
Exactly. And also you get the exposure and engage with them, so they get to have a one-on-one relationship with you as an asset manager.
Yeah, that exposure is very important, because content is what sets folks apart, right? And so content is highly important. Quite frankly, it hasn't been taken advantage of on Wall Street, because generally most people on Wall Street, they don't really post on Twitter or TikTok or Facebook. They're on all the platforms as voyeurs, but they don't really interact or post on these platforms because, quite frankly, the platforms, number one, they don't have the compliance tools that fit their needs. And then number 2 is, if I'm a professional fund manager, I'm not going to post my favorite investment idea on TikTok next to a 12-year-old girl lip syncing Billie Eilish. It's not the right platform.
Exactly.
Right? So you need something like Prometheus with the compliance gates built in. That is professional. That is, geared towards the silo of finance and investing to make, allocators comfortable. Though I will point to one person who's been phenomenal at creating content and building exposure for herself, and that's Cathie Wood. Whether you like her or not, she has taken advantage of the fact that none of her peers are posting content. None of their peers are transparent, right?
Is Cathie Wood on your platform?
Her coworkers and partners are certainly on the platform. I don't know if she may or may not be. I got to check.
Maybe she'll be anonymous. You never know.
Yeah, well, I don't know if she should be, because I've written some scathing things on on her performance. So, but in any case,
when you're putting your performance up for display, it's like it's an equal game. Cathie Wood, definitely there are, it's a kind of cult forming around her. Some groups like her, some don't. but overall, in terms of content, she's doing a pretty good job.
Well, yeah, I mean, think about this. I mean, despite her, negative performance in 2022, I think she still had net inflows. And obviously, it's not because of her performance, but because she was really able to build a brand for herself, right? And so, what I want to do with all the other people out there, much more talented fund managers, quite frankly, is, hey, build a brand for yourself. Robert Mullen or Alex Beinfeld or whoever it is on our platform, like post content so people get to know you, understand you, build trust in you, so that they will ultimately invest.
Did you just say Robin Mullen? Because his performance was amazing.
Yeah, he has a phenomenal performance, obviously, and I mean, he's just literally, one of the best commodities managers and natural resource managers out there. His performance is just remarkable. So
yeah, I had a privilege to speak with him, and we discussed a few things. But coming back to Cathie Wood, I think she's playing a long game, and that's a topic for another day to discuss. Is that asset managers need to focus long game when it comes to buy low and hold it forever. So that's a different discussion. So what does Prometheus aim to achieve this year? I know you have the capital raising facility. I think the last time I spoke with is in its works, or you already published it.
So
the capital raising platform. You said it's
so
in
that's
testing phase.
So that'd be our marketplace, and we've so we launched Prometheus about 6 months ago, invite only mode. So you need to have a passcode to join for your listeners. Passcode is BIRD, and they can create a free account on Prometheus. Thus far, we've actually raised quite a bit of money for managers on our platform already.
Congratulations!
Despite the fact that we haven't really spent any material amount of capital on marketing, we didn't have a sales team. So last year, our focus was on building the product. It was all about product and getting the product to where it is today. And we've done that, and I think the product looks great. Nothing else like that on Wall Street right now. This year is really about business development and building that biz dev team, that sales team, to essentially go and sell the products on our platform. The products being the fund managers and stuff like that. So we're building up the sales team to do these outreach to high net worth, ultra high net worth family offices, RIAs, et cetera. To help our clients essentially raise capital.
This is great because family offices would benefit from Prometheus. The reason I share that is I went to a family office conference. They are very picky, very picky. So I think it would be perfect for them to filter out the asset managers that fits their mission and vision for their office. So thank you so much, Michael. It's very enlightening to hear more about Prometheus, and thanks for everything you're doing for the asset management community, especially the emerging managers.
Thank you very much. It was a pleasure, Alex.
As always.